Hi everyone, hope you're all doing well. In today's video, I'm going to show you 10 years of very detailed backtesting reports for my swing strategy, my lower time frame strategy, and a little bonus strategy at the end of the video if you stick around. I'm going to get to that very shortly. I'm just currently waiting in a very long Tim Hortons drive-thru. I'm hungry and I would like an egg wrap. Right after I absolutely house this egg wrap, I'm going to stop by my investment property. I know a lot of you like to see the progress there, so I'm going to give you all a little update. It's moving along nicely. I think there's probably another 3 or 4 weeks of work left, and then we'll see what happens. I'm thinking of actually listing it on the market. I don't know if I want to be a landlord anymore. That was the initial thought process when I purchased the house, but the more I think about it, the more I want to be more nomadic. I want to travel more. Obviously my income is 90% based online, so I could pretty much be anywhere in the world. I don't need to be tied to a location. Basically, the way I think about it is it's going to be at least 10 or 15 years before I see a real return on investment there. If I'm renting it out, there will be monthly cash flow, but it's so insignificant. It's like it would be $1,800 or $2,000 of monthly cash flow above and beyond expenses. In the grand scheme of things, for the amount of money that's been put into that house, it doesn't seem like it's worth my time. There's so many other things that I could do to exponentially grow that capital. So this just seems like a very slow way to do it. And I know some people will disagree with me on that. I mean, the most millionaires in the world were created by real estate. I'm well aware of that. But in this current internet era that we're living in, obviously the potential of trading, the potential of online business, there's just so many more ways to generate significant revenue, and it makes that $1,800 or $2,000 a month profit seem like pennies. So that's the thought process there. I might just flip it. Basically, there would be about a 6-figure profit if I flip it, because all the work that I've done has built in significant equity into this house. So that's definitely a route that I'm considering taking. But we'll see where things end up once the actual project is done. So I'm going to stop by, give you all an update, a little tour, and then we'll head back to my office, get to the trading desk, and go over these backtesting reports. Probably looks a little different. I took that deck out. There was a big deck there before. It had to go. Let me show you guys upstairs first. Can't really see the flooring much, but it's very nice. Kitchen is pretty much done. Countertops are coming soon. This was all closed off before, so huge improvement. And we got trim going in finally. Doors and trim. It's a nice solid poplar trim. Wanted to show you guys the tile floor as well. It's a nice matte black hexagon tile. Really, really nice. We did that on all the flooring. So yeah, doors and trim going in. Looking good. We've got some built-in cabinetry here to cover up the electrical panel. One of the electrical panels. Let's take you guys downstairs. Good to see you, man.
Nice to see you.
Looking
That's
good.
A fancy case. I know the one you use for your videos at your desk and stuff.
Yeah.
Here, come in.
Got a gimbal
Come
on.
in this side.
Ooh, we got the wall down here too. Looks good.
Yep.
That is looking good.
We put the sills up yesterday.
It's coming along.
It is.
Let me show the flooring real quick. Nice pebble stuff. Sick. Looks good, bro.
Awesome. That's a sick.
Oh, what's up, man? How's it going, bro?
How you doing?
Good, good. Second panel. Still needs to be installed. Still no lights down here, but got a nice built-in shelving unit here, just to clear that dead space, to fill that dead space, should I say. Basement kitchen gone in as well, still waiting for countertops, that should be in a few days. Just night and day difference from what this used to be. Utility room back there. That's about it. Anyways, back to the office. If you guys hear a bunch of noise while I'm recording in my office, it's because of this monstrosity next to me. They're building a custom home right beside my house. And it is loud during the day, man. It is loud. But I love to see it. It raises property values. It makes the street look even nicer than it is. So really can't complain. Plus, having been in construction for about 10 years, there's some crazy part of me that enjoys all the chaos. Hearing all the noise and commotion on a job site, it almost is therapeutic to me. I'm just making a coffee first. Even though I'm already riddled with stress and anxiety, coffee keeps me going. See ya. Back to the office. All right, everyone, back at my trading desk. Let's get to it. Now, before I dive into the actual backtesting results, just in case you're new here, this is your first time seeing me and the way that I trade, I wanted to provide a brief synopsis of the strategy itself so that you guys understand what these backtesting results are actually based off of. And then we can dive more in depth onto the actual analytics in those reports. And hopefully I can provide some real insight that you can implement in your own trading career, in your own strategy, to increase your win rate and basically improve all your statistics overall. So this trade that you see in front of you right now on GBP USD, this is on the 15-minute time frame. This is a trade that was taken a few days ago with our automated EA, and it's a really good representation of how the strategy works. There's a few confluences that go into play here. If you're familiar with any of my videos, you should know these already, and they're actually already listed in the top here on the Currency Pros checklist. This is our trading view indicator that you see. We also have a fully automated version of it on MetaTrader 5 as an expert advisor. So let's go over some of the criteria that made this trade happen. First things first, we have a higher time frame alignment. So whenever I'm trading on the 15-minute time frame or the 4-hour time frame, right? I have two different styles of trading, high time frame and low time frame. It's always based on a higher time frame bias. So in this case, it's tied to the daily bias. So I have it set in both the EA and the trading view indicator to look at the daily time frame as a higher time frame bias. So currently it's saying the higher time frame, which is the daily, is in premium. When the higher time frame is in premium, that means we're going to be looking for sells only. We don't want to trade counter trend. We're not looking for buying opportunities, sells only. Next thing is a liquidity sweep. So let's draw out where that would be. Now the Currency Pros indicator does this for you, but this is previous price. It doesn't show that. It's only going to show the current ranges. This was a few days ago. So the liquidity sweep here was right about there. And of course, the reason that's a liquidity sweep is because it was basically a false move to the upside. This was the previous high, and then price made a new high, but then immediately changed direction to the downside very abruptly. So that shift to the downside created a break of structure right here. And only when that occurs, we can identify that this was a liquidity grab. In real time, it's very hard to do that. It's only after the fact, after structure shifts in the opposite direction, that we can actually go back and say, okay, this was the liquidity grab. We're now clear to sell. So those are the first two pieces of entry criteria checked off the list. Now, break of structure plus imbalance, we've already identified the break of structure. So the imbalance is the next very important thing that I look for. In fact, one of the most important things. Obviously, structure gives us the bias for the trade. It identifies trading opportunities, but the imbalance, or fair value gap as many call it now, is the real draw for price to react to. So the imbalance here, again, the Currency Pros indicator usually does this for you. It makes the visualization for you on the chart, but this is past price action, so it's not going to show up anymore. So the imbalance was right here, and basically that is the gap between, let's just delete it, the gap between this candle's low right here and this candle's high right here. So in between that, there's a space that wicks have not filled. So that's the imbalance. Now, it's a really good confluence for us to have the Fibonacci level land on the imbalance. Through automated backtesting, we've had the luxury of being able to turn off and on different settings to really test how powerful these confluences are. And there was a significant improvement in terms of win rate and other statistics when the Fibonacci level that I enter upon landed on the imbalance or fair value gap. So that's of course checked off the list as well. Now next up is the 71% retracement. Pretty straightforward. The Fibonacci tool is drawn between the swing high and swing low. Obviously in a bullish scenario, it would be the inverse of that. And as soon as the swing low is confirmed, we set a pending limit order here, a sell limit order, and then wait and see what happens. Either we get a loss or a win. In this case, unfortunately, there was pretty severe drawdown, but overall, price respected this bearish range here. It did not violate the high. If it did, that would be a different story. But since it remained within this range and then abruptly dropped to the downside, it very quickly went towards the full take profit. So it really is this simple, guys. If you want any more clarity on this, I'm not going to spend too much time on it, but I've done full strategy videos on this in the past. So just go to my channel and look those up. I've released my full trading plan numerous times, as well as many other in-depth videos. So I just wanted to provide some context here before getting into the backtesting results so you guys all know what we're dealing with. Now, without further ado, let's head over to the PDF reports and we'll really break them down. All right, so let's kick things off with the backtesting report of the 4-hour trading strategy. This is the one that you guys are most likely going to be familiar with if you've been on my channel for a while. This is basically the higher time frame swing trading strategy. So we did a sample size of about 10 years. So this is pretty substantial. It's a lot of data to go by, and I think it's going to be very beneficial to dissect. Now, I'm sure your eyes are going to be immediately drawn to the big green number up here saying 350.65%. That is pretty healthy. That's, of course, the total net profit over the course of these 10 years with a yearly average profit of about 38%. So very nice. Now, diving into some of the stats here, we have an average win rate of 51.42%. That, I'm very happy to say, is very healthy. We've done a lot of tweaks and fine-tuning with the settings that were used to test this sample size, and we actually improved it from the mid-40s as a win rate all the way up to over 50%. So I'm very satisfied with that. I'd also like to draw your attention to the equity curve here. It's pretty healthy, just a steady trajectory upwards. But the most important thing here to me is the monthly performance section. This is the most interesting part of all the reports that I'm going to show you today. But this is a great indication of how our strategy works. And more so, it's a realistic viewpoint of what real P&L looks like. So on the left column here, we have, of course, the year, and then we have all the months in between. And then on the very right side, we have YTD, which means year-to-date net profit. So I want you to quickly look through all of the year-to-date profits here, and that should give you a good idea of how this strategy performs. Now, we only had 2 negative years within this sample size. Of course, that's not ideal. We don't want to see any negative years, but let's keep in mind this is the reality of trading. Unfortunately, I would say due to social media as well as prop firms in the space, most traders have a very unrealistic viewpoint of what trading actually looks like. Just because prop firms have a profit target of 10% per month or 8% per month, that doesn't mean that that's a realistic thing to do each and every month, no matter what, without fail. In fact, if you were able to do that consistently, you'd be one of the best traders in the world. The point that I'm trying to get across here is that if you look through all of these months, we have some negative months. Even, for example, 2022 here, we have 3 negative months in a row, and then we have a break-even month in April. It shows 0%. Yet if you pan to the right side of the chart, you see that the year-to-date net gain was still just over 51%. So that's pretty substantial, more than what most firms and hedge funds make in a year, and certainly more than what most retail traders make in a year. But the thing is, during those 4 months of loss or just slow trading conditions, that's when most people give up. That's when most people say trading is a scam. This doesn't work. The strategy doesn't work. Maybe they'll shift to a new strategy and go through a learning period on that and just be in this constant cycle of break even and loss. It's the ones who are patient and have the discipline to stick to a trading system that will then deserve to have these 6% profit months, a 41% profit month, just over 11% profit month. And then yes, down another 7.5%, but then the following month up 8.26%, another 17% in November. If you can't stomach those bad months or those slow periods, then you don't deserve to see that year-to-date profit. And in fact, you never will if you're constantly switching strategies. So I say all of this because honestly, this year has not been great for me in trading so far. I've been doing this for about 7 years, and one commonality that I've noticed is that the third and fourth quarter are typically the most profitable for me. I'm not sure why that is. I'm still trying to figure that out. But typically the first and second quarter, especially the summer months, are very slow for me. And sometimes I struggle back and forth in my own mind, like, should I do something to adapt to these market conditions, or should I just remain patient and wait for that third and fourth quarter to pick up the pace and really make my profit for the year? That's something that I still personally struggle with. Obviously, I'm not perfect, but looking at data like this should really help solidify the fact that we need to stick to our trading strategies, even if we're going through difficult times. Now, I'd like to highlight a couple more stats here. Some really interesting ones: the max consecutive wins being 6 and the max consecutive losses being 6. So one of the reasons automated backtesting is so cool is because all of this is available so quickly, and it follows the exact rules of the trading strategy. It's literally just coded in. So we know that this is accurate data. The alternative to this would, of course, be using a platform like FX Replay, which I highly recommend. It's a tremendous platform, and I do think it's very beneficial, but more so for beginner to intermediate traders, because performing the actual trades in a simulated environment and seeing the results and studying the analytics from those sessions, that will really build in a sense of confidence in yourself to execute the strategy in real time. It's like putting those reps in at the gym to build a muscle. However, for somebody who's been doing this for so many years, automated backtesting is what appeals to me the most, because if I ever have any random brainstorm idea, like, oh, I wonder if this could tweak my win rate by 2% or something, for example, then we can literally just alter the settings within MetaTrader, run the test again, and immediately see the result of that change. And so I can very quickly know, okay, this isn't worth implementing, or this is worth implementing in just a very short period of time, and save myself all of that effort from manually backtesting 5 to 10 years of data, which could take weeks or at least many days. I think I've rambled enough about this one. It's been on the screen long enough where you can study it and see for yourself. If there's anything I missed here, feel free to ask in the comments down below. But let's now move on to the lower time frame strategy and compare that with these results. So here we have our lower time frame strategy. Now, these trades are executed on the 15-minute time frame, and that, I believe, is the main reason why the performance is a little bit less impressive. So this style of our strategy is a bit more aggressive. Now, I want to clarify something. It has the potential to be more profitable, but it also has the potential to incur big losses because of the aggressive nature of the lower time frames. Now, me and my developer, we are actively working on ways to improve this. One of the ways we're thinking of is to even just limit the amount of pairs that are being traded, and that could improve all the statistics. But even as it is now, there's tremendous opportunity here. Now, to add on to what I was just saying, before I get into any of these stats, I want to draw your attention to the bottom here. Again, max consecutive wins, 7, which is 1 higher than the 4-hour strategy, but max consecutive losses could be up to 10. Now, that doesn't indicate future performance. It could be slightly higher than 10. Just this month in May, I had 12 losses in a row, which really sucked. However, that was prior to this backtesting report. We actually made some significant changes within the strategy itself, altering how the structure is calculated. And then we ran these reports again, and it showed significant improvement. I believe the win percentage jumped up by about 4%, and the max consecutive losses dropped a bit as well. So again, that's really the cool thing about this automated. And just to reiterate, I think that's one of the best features of having automated trading and automated backtesting, because you can make those changes and just adjust the strategy as time goes on. As soon as we notice that something's wrong, we can study it, analyze it, and come up with a solution for it that should improve results. So let's dive into the monthly performance here, and also take a look at the equity curve. It actually looks smoother than the 4-hour side, which is interesting. I also want to mention we only did 5 years of data here, because the number of trades is so much greater than the 4-hour sample size. Here we have about 800 trades being taken. On the 4-hour side, there was about 200 something, I believe. So because of that, we decided not to do 10 years, because this is a sufficient comparison. Drawing your attention to the top, this number, the 291.34%, that is definitely lower. But interestingly enough, the yearly average profit is significantly higher. On the previous report, it was in the 30s. Now it's low to mid 50s. So that's very interesting. Like I said, this has the potential for more profit, but it also has the potential for greater loss. So it's definitely more a suitable style for people who prefer risk. Whereas the 4-hour swing trades are for more of a patient trader, almost borderline investor, because you only get, 3 to 5 trades a month on average with that style. So it's a much less active approach to trading, whereas this, you're constantly getting trades, typically anywhere from 2 to 5 per week. Now, taking a look at the monthly performance section, in 2025, actually, we can see it was ran up till May, and May shows a 12.74% gain. So that's interesting because, again, like I said, I had a big losing streak this month. I've won a few trades this month, but the losses have unfortunately outweighed the wins significantly. I also risk a significant amount on my personal accounts, so that drawdown really adds up quickly, and it requires a great deal of patience and confidence in myself and my abilities and the strategy itself in order to withstand that. The changes that we implemented to how the structure is calculated within our strategy resulted in May being a losing month to now being a profitable month, and not just that, but significantly profitable. So I'm very excited for the changes that we've implemented, and I'm looking forward to seeing how all of these months here perform for the rest of 2025. Now, I'd like to highlight 2021. If we take a close look at the monthly performance here, we can see that July, August, and September were all losing months. 3 losing months in a row, okay? I mentioned this before, but that's where most people will quit. That's where like 90% of traders at least will give up because they'll say this isn't working. Or at the very least, they'll switch strategies to something new that seems like it could have more profitability potential. Those are the difficult months. Those are the months where I'll get called a scammer or a fraud or I'm false advertising, the strategy doesn't work, you're a liar, blah, 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 you're scamming people. Those are the months where that is my reality, unfortunately. My DMs are flooded, all the impatient people who expect to be rich and have a Lamborghini in a month, they're very upset with me during those months. And unfortunately, they don't stick around for the following months, right? This month, October, would have made up for that September loss and had a small net profit. And then November and December would have been significant profit. And you can see that the year-to-date result here is just over 76%, despite having 3 significant losing months in a row and having 3 losing months prior to that scattered throughout the first and second quarter of 2021. So there are some very important lessons here when analyzing this data, and that's why I wanted to make this video, to give everybody hopefully a more realistic understanding of what trading actually is. Because again, drawing your attention to these 3 months here, let's say this negative 9.42% month in August of 2021, let's say you blew your funded account that month. Or maybe you were just doing a challenge and you failed the challenge, or multiple challenges during that month. That would then probably make you feel like a failure. And that's understandable. I get that. I've had that feeling many times as well throughout my prop firm journey. Thankfully, I started trading before prop firms were very popular. I had no idea what that was when I first began my trading journey. So I relied on funding my own personal brokerage account with my own real money that was at risk. Back then, I had a construction business and I was constantly siphoning in all of my profit from that business into my Forex account. And that's how I initially grew my capital. Now there's so many opportunities out there for people to grow capital and obtain trading capital that they would have otherwise not had access to, which is great. But the caveat to that is that it creates these unrealistic expectations and ideas of what real trading looks like. And I've said it before and I'll say it again, prop firm trading is not real trading. August of 2021, this almost 10% loss, again, that would make you feel like a failure, right? You'd lose your challenge, you'd lose your funded account that you worked so hard to obtain, and you'd feel like a total failure. Whereas if you were trading on a personal account and you had a 10% loss that month, you would still have your account. You would still have all the remaining capital within your account. You wouldn't be violating anything and having to redo a month-long process or a 2-month-long process just to recoup that. You could make back that 10% within the next couple of weeks. So looking at these 3 months in a row from the perspective of trading personal capital on a regulated brokerage account, during these 3 months, you'd of course have to exercise a lot of patience and discipline to not go on tilt and dig yourself into a deeper hole. But if you just stuck the course, then these following months would make the entire year profitable, basically. The same thing could be said about the 2024 data here for September and October, negative 7.35 and negative 5.34. Those are 2 rough months that would not be fun to deal with, obviously. But then the following month, all of that is made up for and more with a 15.5% gain. So I hope by me showcasing these results here, you're starting to see the bigger picture, right? When you see all of the data presented like this, in this long format way, you start to zoom out a bit and stop thinking about, was this week profitable or was this month profitable? Because it's impossible to do that week after week, month after month. You are going to have bad months. You're going to have bad weeks. You could even have a bad quarter and still be net profitable at the end of the year. This is not a get rich quick scheme, guys. You need to take this very seriously. I look at this as a career. As the years go on in my trading journey, I lean more and more and more towards only focusing on this year-to-date result. Was I profitable this year? And even going back to the 4-hour report that we analyzed prior to this one, there were 2 years that weren't even profitable. So times like that require a great deal of patience as well. But again, this is a career path. This isn't a get-rich-quick scheme. Take a moment to think about the cryptocurrency market, or the real estate market, or even the luxury watch market. Every market in existence has its ups and downs, really well-performing years and really bad-performing years. Every market on earth. But you can see that if you zoom out and look at the bigger picture, in the long run, you will be profitable if you stick to the same system, no matter what. Obviously, it's smart to choose a system that resonates with you, but once you find that system, stick to it. Ironically, right before sitting down to create this video for you all, I had somebody in my Discord DMs pestering me about the losing streak I had this month in May. He said something along the lines of, you lost all of this money in May. I can't believe you're charging people for this. Like basically calling me a scammer and stuff, saying my teachings don't work, nothing works, the EA doesn't work, etc. And all I did, instead of responding to him with text, I just sent him these PDFs. He continued to complain. I said, have a nice day, bro. I don't have energy for this, As time goes on, I just can't be bothered with these types of people. They have a completely unrealistic expectation of how the market works, and I am not responsible for that, and I won't be. Now, if you've made it this far, you're in for a bit of a treat because I'm going to show you a third backtesting report that is extremely exciting. So let's get into that. This, my friends, is a version of our EA that is only for trading gold. Now, this one is very interesting. It is a slightly different strategy. It's more of a breakout strategy. And the reason for that is that our typical strategy, the one that I teach on this channel, is really not that great for gold. I've had a lot of success with gold and NASDAQ and some other indices and commodities, trading those manually in the past. I've had some success with that. I've done, pretty significant flips unintentionally. I started an account with 2,000, grew to 50,000. I did 10,000 to 60,000. I've done that quite a few times, but it's inconsistent. The commodities and the indices don't respect the strategy that I teach here as well as the Forex pairs do. So the very talented developer at Currency Pros figured out this highly profitable strategy for gold. I'm not going to go into details of the specifics of the strategy right now. That could be in future content. This is basically a teaser for what's to come because this version of our EA is going to be included in the current offering for the EA. So anybody who has the EA will automatically get access to this probably within the coming days. And basically the goal of this is to act as a supplement to have alongside with the Forex assets being traded. This is a very specialized strategy specific for gold. So let's take a look at these stats. First things first, this big green number here, there is something inaccurate about that. Me and the developer couldn't really figure out why it was showing up like that. The profit in money makes a bit more sense because there's something to do with compounding here, right? Like if you add up all the year-to-date numbers here, it doesn't add up to whatever this crazy number is, 12 million something. Risking 2% per trade, the initial balance was 10,000 trading gold. Okay, so I'm not sure how that number came about. If somebody could sort that out for me, that'd be great. Leave it in the comments down below. But let's focus on the other stats. The yearly average profit here is 137%, which is absurd. Now, the win rate, also absurd, 58.72%. And look at the sample size of data here. Part of 2025, all the way back to most of 2017. So a significant sample size of data. So to have just under 60% as an average win rate is pretty insane. The equity curve here is also much smoother. And if we focus our attention to the monthly performance section of this report, you're going to have your minds blown. So just look at each month here. It's absolutely insane. But going back to what I was saying before, even with this, we have some negative months, right? We have in July of 2023, we have negative 1.7 and then negative 13.31. So again, during those times too, people would be like, oh, it's not working anymore. I need to do something else. And they start panicking and moving their money around and canceling subscriptions and signing up for this course and looking at this YouTube video and switching up their whole lifestyle because of it. Those are the months that screw with people. But then if you look at the bigger picture, like I've been saying this whole video, if you look at the bigger picture, you see what long-term results actually compound into. 2025, 95% so far. 2024, 215%, just under 215%. Like what? 2023, 184%, like 253% in 2022. These numbers are unlike anything I've ever seen. I'm not going to spend too much time on this because I am not a salesman, guys. I'm here to provide education. I also provide tools for traders that are interested in them, but the education here is free on YouTube. So I'm not going to spend too much time on this, but I just really wanted to showcase this because it's something I'm very excited about, and our whole community is very excited about it as well. Now, scrolling down to max consecutive wins and losses, this part is pretty crazy too. Max consecutive wins, 13. Max consecutive losses, only 5. So as you can see, this, oddly enough, is outperforming the actual strategy that I teach here. So not to say that that's bad, but this is clearly outperforming that. And just to clarify, backtesting results do not indicate future performance, but it is a pretty good indication, let's be honest. I mean, this is a very large sample size of data, and when you run automated backtesting, like I said previously, it is based on very specific entry criteria. There's rules that are coded into the expert advisor, and that is how the backtesting is performed. So there's no emotion involved. There's no, oh, I had a bad day or I broke up with my girlfriend. There's none of that involved. It's just, is the setup there? Take it. Or if the setup isn't there, delete the order. Like, it's very straightforward without any emotion or interference. And because of that, these results should be taken quite seriously. So like I said, this is a very interesting addition that we're going to put into the current offering for our expert advisor. If you want more information on that, just click the link in the description below. It's the only link there. It's a link tree, so it will link to a page that has multiple links. It's very self-explanatory. So if you want to take a closer look at that, or the other tools we provide, such as the Currency Pros indicator, then feel free to check out that link. And I think going over the monthly performance here should really provide some more realistic expectations for all of you watching this right now. I hope that seeing these ups and downs, but seeing the net end result, will make you take a deep breath, just breathe, chill out, relax, and just let your strategy work for you. So I think I'll end this video here. I want to thank you all for watching this video and all of my videos. The channel has grown significantly, well beyond what I ever thought was possible, it's just crazy to see. I know I've been uploading kind of inconsistently this year. I'm going to try and take that more seriously. I've just got so many other things going on. It just kind of comes last for me. But that's not to say that I don't appreciate all of you so much. So thank you for subscribing. Thank you for engaging in the comments down below. And if you haven't already, like the video and subscribe to the channel, because I will be posting more videos like this, insightful, valuable videos that can help you in your trading journey. So thanks again, and I'll talk to you all soon.